Good evening. So quick market update video for you guys here. I'm going to take a look at the indexes, QQQ, S&P 500, IWM, see where we stand with regards to them. Also, I want to take a look at some of the bigger tech names that are reporting in the coming weeks, how they could potentially influence the future market direction. And then also, I want to talk about the FOMC meeting, what it could potentially act as for the markets. I have only one stock on my long watch list. There's really just so much damage to the charts. It's going to take at least a week or so before we see some sort of relative strength and something to act on. So without further ado, let's kind of just talk about the QQQ right now and take a look at where it is. I guess we're on the weekly, so might as well start there. Right now, we're technically moving into stage 3 for the QQQ. That just means that we could potentially be in a consolidation phase before breaking down to stage 4. Or it could be what resolves to be a stage 2 continuation. So if this were to be a stage 3 top, we would likely move sideways for a couple more weeks and then break lower. If we were to be in a stage 2 continuation pattern, this is completely healthy price action. We're just moving sideways on the weekly chart, and then we're going to break higher and have another leg up. It's too early to tell right now what this really is. It's either stage 2 transitioning into stage 3, or it's simply a stage 2 testing the rising 30-week moving average before moving higher. We'll have to wait and see. If we take a look at the daily, you can see that we were short-term oversold into a key support level where we've closed with basically a long-legged doji on moderate volume. Not really a whole lot of surprise there. The market was very overstretched, and when a market's overstretched short-term, whether it be to the upside or the downside, while moving into a key supportive level, it's going to act as basically a zone where you can see price kind of spring higher. So what we could expect in the coming days is some sort of consolidation before continuing down, or some sort of consolidation before attempting to reclaim the short-term moving averages and potentially even this falling 50-day moving average. We have Microsoft and Google reporting tomorrow after hours. We have Amazon and Meta reporting, I believe, Wednesday and Thursday or the same day. I can't recall, but later on in the week. So those can all act as potential major catalysts. So we're going to have to be very careful when it comes to swinging anything over in the coming days because of the potential gap risk that comes with them. However, if we have positive earnings reactions for, let's say, theoretically, all 4 of them were to have positive earnings reactions, the market could absolutely rip to the upside. You got to keep in mind right now, if the fear greed index is at about 26. So major market turning points occur at market extremes. So when the overall market is in a state of pessimism, it's generally going to tell you that a lot of those that are pessimistic in terms of the market are probably short. So when you have a potential catalyst in the form of the Fed or some kind of major earnings winner like Microsoft, something that has a lot of weight in the market, it could quickly put those shorts in a bad spot and force them to cover, causing some sort of short squeeze like we had right here and like we had right here. So I would be very uncomfortable if I were short the market right here, especially if I had no cushion at all. So with that said, the S&P 500 is in a similar situation. It undercut the support level and then attempted to rally back and reclaim the 200-day moving average. However, it failed and closed below it. Technically, we're still in the range of the 200-day moving average. This is not considered, it has not been considered to have lost the 200-day moving average until you close at least 180R below that moving average, right? These moving averages, consider them drawn with crayons, not with pencils. So it's an area. So if we were to close 1.34% below it, which would be around here, then technically we would have forfeited, the bulls would have forfeited the 200 moving average, and we would now need to attempt to reclaim it. But as of right now, it's simply sitting on the 200-day supportive area, which coincides with the previous low. Now we're once again just waiting to see how it consolidates in the coming days. And does it get rejected from the short-term moving averages and break lower? Or does this strong supportive area, you get your downtrend support, your 200 rising moving average, and your previous low act as an strong enough of a support level for demand to come in and bulls to push through these resistance levels. If earnings doesn't do it this week, if Microsoft, Meta, Amazon, Google, they don't have enough firepower to do it, then it's going to be up to the Fed, right? Does the Fed do some kind of pivot? Does it come, it's basically a 98% chance that we pause where we are right now in terms of interest rates. So there's not going to be any surprise in terms of that, because there's a good chance that the Fed doesn't like to surprise the market. So it's really going to come down to his overall posture. Is it going to be hawkish or is it going to be more dovish? We'll have to see. That's what the market's going to be paying attention to. But we'll more than likely pause interest rates. It's just going to be the language. Now, SPY, QQQ, same kind of thing. Even the IWM, obviously a lot weaker here, but they're very extended to the downside. We're likely to see some sort of consolidation in the coming days, and either we bear flag, break lower, or what would seem to be like a bear flag and then break higher. Time will tell. So not a whole lot to do right now, but we just have to kind of wait and see how these stocks report. So obviously, as I mentioned last week, Tesla and Netflix, their earnings were going to kind of stage the sentiment for the rest of the market until Microsoft and Google report. And obviously Tesla, which is a lot more heavily weighted than Netflix and the QQQ, I think it's about 4%, which is really not a lot at all, versus Netflix, which is like a quarter of a percent. I don't even know why I include it into grade 8, to be quite honest with you. But the market saw Tesla's earnings and they didn't like it at all. There was other factors as well. Bonds were getting annihilated, which put a lot of pressure on the stock market. So Tesla here, I'm really waiting just to see for some sort of short opportunity, but not a whole lot to do here as of right now. Apple, we're waiting for earnings next week. It's the second heaviest weighted, or it's either the first or second behind Microsoft in terms of weight for the QQQ. So it's another very important earnings to watch. If it's not, perceived well, then it's going to put a lot of weight on the QQQ. So really the main two earnings that we need to focus on are going to be tomorrow's Microsoft and then next week's Apple. Google is relatively heavily weighted as well, so that's going to be a big one, reporting right next to Microsoft. And then we have Amazon and Meta. So it looks like we have Meta on Wednesday and Amazon on Thursday. And then NVIDIA is a month from now. So there's a lot of uncertainty in the markets right now because all of these tech giants that are going to have to report. And obviously the VIX, the volatility in the market's very elevated right now. So we're going to want to just be very patient. Let the initial reaction for these earnings kind of pass, and then take that secondary setup. If, for instance, Microsoft gaps up, it gives us some sort of flag, we'll be ready to play that secondary setup, that breakout. And that's what I'm looking to do for all of these. In fact, any stocks from earnings season that have strong moves to the upside, I'm waiting for that continuation pattern to form, and that's where we look to play. Same thing for stocks that gap down. They're going to give us some sort of continuation pattern, and that's where we look to get involved when they have that, when they resolve back into that downtrend. So next week we have the FOMC meeting, and that's going to have obviously a lot of a very strong impact on the markets. Between that and earnings season, I'm really not in too much of a rush to get involved with the markets. DraftKings today, definitely a standout in terms of relative strength. I was not expecting this at all. We were short right here. We had more than enough cushion, but just looking at how things were the first 20 minutes, we quickly got out of our short position and moved right into a long position, and we're able to trim some for profit right off the bat. We'll see if the index is reverse tomorrow. This could see a major move up to the 50-day moving average, similar to what we saw here where we had a continuation to the upside. So we'll have to see. But right now we're kind of holding with pretty significant cushion. We'll keep an eye on that one. But tomorrow, this is a potential trade here. So GPS treated us very well last week, about 100% gain on that one. Coming back down now to test that breakout location. So we break out higher, on on strong volume, and then we pull back on light volume. So the volume pattern is very healthy. Strong advance on heavy volume, very shallow pullback on decreasing volume. Now we have a long Nikkei Doji to play for a potential reversal back to the upside. So that's really the only stock that I see fit in terms of structure. A lot of the other stocks are just like, a lot of the charts are just broken. Even the former relative strength leaders like Palantir, it's just, there's a lot of damage right now. We need, let it move higher and then give us some sort of pullback buy to play. But until we get that, it's just too high risk. So especially Palantir has earnings next week too. So just got to reduce activity. Basically, to conclude, not a whole lot to do this week. We got to be patient, just like we were last month. We didn't get chopped up. We were ready to act, and we had a huge month. This month, we're going to do the same thing. We're already having a very strong month. We're going to close it strong as well. All right?